Okay, so this should be the third and final video for the extra content from Chapter 3. So in this video, we are going to go over Exercise 3.3 from the textbook, which is located on page 145, and it is relating to preparing adjusting entries. So I chose this problem to go over because it does include some easy ones that we've gone over in tutoring, and then again in some of the earlier adjustments, as well as some harder adjustments that maybe we haven't gone over or aren't as clear. So I hope I can clarify those. Um, so the question says, prepare journal entries for the year ended December 31st, 2017 for each of these separate situations. And then here is a list of accounts that is also provided in the textbook from which to pull the accounts for the journal entries. So as you can see, there's not that many. So hopefully these should be pretty clear in terms of picking which accounts. So for transaction A, it says depreciation on the company's equipment for 2017 was computed to be 18,000. So for these, I will give you a second to pause. If you want to pause the video, that would be great. And you can try and figure out what you think the transaction would be. And then I will kind of just pause for a second and you can pause the video. And then I will go over what the answer is and kind of a little explanation. So for this one, you can pause now and try and figure out what it would be. So because this is an expense that we have to do annually, we are going to debit expense for $18,000 because expenses have a debit normal balance. And then for a credit, we are going to do accumulated depreciation for equipment. This is a credit because it is a contra asset account. This one's, we've done a couple of these, so I'm not going to go too much into detail on that. But for B, it says the prepaid insurance account had a $6,000 debit balance at December 31st, 2017, before adjusting for the cost of any expired coverage. An analysis of the company's insurance policy showed that $1,100 of unexpired insurance coverage remains. So I will let you pause this if you want to go over it by yourself now. Okay, so these I kind of look at as almost like word problems in a math class. So how I like to lay it out is, okay, we had $6,000 balance before adjusting, and then at the end of the adjustment, there is 1,100 in unexpired insurance coverage that is going to go into the next year. So I set up a little equation like this. As you can see, the $6,000, the balance before adjusting, minus an unknown amount of used insurance equals the ending amount of 1,100. So basically, we're just going to solve for this number. So 6,000 minus what is equal to 1,100? And that would be 4,900. So this is how much insurance was used during the year. So we started out with $6,000. We ended with 1,100, which means we used 4,900. So the journal entry for this is going to be debit insurance expense for 4,900 and credit prepaid insurance for 4,900. Again, expense has a debit normal balance and assets have a debit normal balance as well, but since we are using that asset up, we need to credit it. C. The office supplies account had $700 debit balance on December 31st, 2016, and $3,480 of office supplies were purchased during the year. The December 31st, 2017 physical count showed $300 of supplies available. So this one, same thing. I'm gonna set up a account, but set up a little equation. But you had 700 at the end of the previous year. You bought $3,480 during the year, and you ended with $300. So I'll give you now to pause to go over it yourself. Okay, so this is what I set up. The $700 beginning balance plus the $33,480 purchase minus how much we used results in a $300 ending balance for supplies. So if you solve this, it will be $3,880 for this mystery amount right here, which is how much we used during the year. So the journal entry for this would be debit supplies expense, credit supplies. Again, expense, debit normal balance, because we're getting rid of an asset, we would credit it. I just think that writing it this way as kind of a math problem helps, at least me, it helps me look at the problem and figure out what is that number I need to use and how does it relate to those other numbers that we are provided. So I hope that's also useful to you. Transaction D. 2/3 of the work related to $15,000 of cash received in advance was performed this period. So this is going to be a unearned revenue problem. So I will give you a second to go over it now. Okay, so first I want to calculate the amount. So 2/3 of the work was performed this period. So we need to account for that 2/3 of the work. So $15,000 is the total amount. So we multiply that by 2/3 to get $10,000. So of that $15,000 that was received, we performed $10,000 worth of it during this period that we need to record, and the remaining amount is $5,000 that we have not yet performed. So that is the remaining unearned revenue. So the journal entry for this would be debit unearned revenue for $10,000 and credit revenue for $10,000 as well. Revenues have a credit normal balance. Liabilities also have a credit normal balance, but because we're decreasing this liability because we performed the work, we debit the unearned revenue for that amount. E. The prepaid insurance account had a $6,800 debit balance at December 31st, 2017, before adjusting for the cost of any expired coverage. An analysis of insurance policies showed that $5,800 of coverage had expired. So I will give you a moment now to go over this problem yourself. Okay, so this one we don't necessarily have to do the equation, but sometimes it can help just to look at it to figure out the relation between these numbers for a situation where maybe you would need to create a little equation like this. So we had $6,800 of insurance policy at the beginning of this transaction, and the analysis showed that $5,800 expired. So the remaining insurance policy balance that would go into the following period would be $1,000. So you don't necessarily need this, but I think it just helps to start understanding those relationships between the accounts. So for the journal entry, or I guess I should go back. So we don't use this because it's just asking how much expired, and they already gave us how much expired. So we need to decrease the prepaid insurance account by $5,800. That would be a credit to the asset, and expense that amount as well for insurance expense. The final one, F, is wage expense of $3,200 has been incurred but not yet paid as of December 31st, 2017. So this is kind of a problem that we had in the original part of these past two videos, where maybe let's just say your workers have been working, but the week or 2 weeks that they're paid covers two different periods, in this case 2 different years. So $3,200 has been incurred in 2017, but it's not being paid out until 2018 because that's when the pay period ends. But because of the rules of accrual accounting and how we need to record revenues and expenses in the period in which they occur, we need to record this $3,200 wage expense for 2017. So the journal entry for this would be, I'm sorry, you can go ahead if you want to try it on your own right now. Otherwise, if you're just looking for what it would be, the journal entry, it would be a wage expense debit for $3,200 because expenses have debit normal balance, and you credit wages payable for $3,200 because this is a liability that we're going to have to pay out in the following year. of 3,200, and liabilities have a credit normal balance. So the only reason I say what their normal balances are is because this is kind of new to all of you, or at least most of you. So I just kind of say that so you can constantly be checking yourself on uh, the normal balances. The more you do that, the quicker you'll learn and won't have to do that in the future. But I think it's just a helpful reminder. So that is all for this video. I hope that you found these, I guess, 3 videos useful in going through and kind of going through those harder adjusting entries and posting them to the trial balance. If you have any questions on these problems or any others, you can email me at cneyhart@uwm.edu.